Yes, what's up everyone? Welcome to a new video. This is module 2, lesson 2, and today I'm going to talk about reviewing and the importance of reviewing and also some tips on what to track and what to review. So please pay attention, take notes. If you have any questions, just comment down below and I would really appreciate it if you leave a like. Let's get started right away. First, the risk disclaimer. All right, so the table of contents. So first I'm going to talk about what is reviewing, then why reviewing is essential, things to review, reviewing routine, and a bit of a recap. So first of all, what is reviewing? Reviewing means you're going to look back over your performance. Let's say you've traded for a year, you're going to look back at the results of this year and you're going to analyze where you can improve. And that's basically the point of reviewing. The point is to learn from your mistakes and to learn from the things you've done in the past so that you are better prepared for the future. And a lot of people skip this part, and I don't know why, but they think that staring at a chart all day will make them profitable somehow. Yes, chart time is important and backtesting is important, but if you're not learning from your mistakes, you will not get anywhere. It will add years to your learning curve until you realize that you need to be learning from your mistakes and that you need to look back over your performance to see if there are things to improve. And that brings me to the next point, which is why reviewing is essential. So like I said, learning from your mistakes. Everyone is going to make mistakes. Just the other day, I got a message from someone who was down a lot of money on a particular pair, and he was asking me about if he should close it or if he should hold it to potentially get out at a better price. And I said, what does your plan say? And he said, well, I shouldn't be in it. And then I said, close the trade, because you don't want to be gambling simply hoping the price will turn around and you get a smaller loss. That's not a good strategy. But what I did tell him is, look, you've made the mistake right now. It has cost you money, and now make damn sure that the money is lost because of a good cause. So make sure you learn from this mistake and make a plan to never ever make that mistake again. And that way you improve. That's another 1% to add to your process, and you're one step further to your goal of becoming consistently profitable. But it all comes down to learning from your mistakes. And just like a regular business, regular business, they have a plan. They review what they have done. They look for things to improve. If there is something a cheaper and better supplier, they go to that supplier, and it saves them money to improve their business. And that's exactly how you should think when you're trading. And the aim should be to learn from your mistakes and also find out why you make them, so that makes it easier to fix them for the long term. Now, the next point is finding ways to improve. And this is also something a lot of people skip. I don't know why, but this to me is what makes the game fun. This is why I do it. This is why I enjoy it. It's because you're never done. You're always learning. And even if you don't need to know everything about the markets, but just about your own strategy. There's always something you can improve. There's always a better entry. Look for ways to get a better entry. It keeps it fun, it keeps it exciting, and reward yourself when you found something. Just a few weeks ago, I found something that can massively increase my edge. Now I'm working on it, and I've been trading for over 4.5 years. I've been consistent for a year right now, and still there are ways to improve. And when I'm trading 10 years, I will still be testing things out because I like it, and because that's what keeps you in the game. Because if you're not working on it, sooner or later your edge is going away, or you will grow to dislike the game. But something will happen that will prevent you from making money. So that's also important, finding ways to improve. There are a lot of ways to do it. In the next slide I will talk about a few, but in my coaching sessions, I go really deep on this topic because I think it's so essential to review and find ways to improve. And like I said, there are so many things you can improve, but most people are not aware of them. and they seriously lack performance because they're not aware. But if they just knew what to review and to journal and to take the time to do it, they would be a lot better traders. But again, this might be the boring work, I don't know, but people just don't take the time to do this. Now, the next point is doing more of what works. And a lot of people want to do everything. They want to swing trade, they want to day trade, they want to trade so-called smart money concepts, etc. They just want to do everything. And I'm like, you don't need to do everything to make money in the markets. You need to do what gives you the edge and what fits with you. And that's what you need to stick with. And then you should look at what is working when doing these things, and then you do more of what works. And that's the holy grail. I just spilled it. This is the holy grail. You need to find out what works. And like, my way of trading is quite unique. I do use some concepts that are out there, but my approach is very, very different. And that's it. And when people ask me like, oh, what do you think of gold? I just say there's no setup for me. I don't see anything. There's no reason to see any setup at any single time. The setup needs to come to you. Don't go looking for it. It needs to come to you, and only execute when you have the edge. And that's what you need to do. Focus on a few things that work for you and do more of that, and find ways to keep improving those while eliminating your mistakes. So, things to review. Now, the first point, your performance versus the system performance slash the backtested performance. So once you have backtested your strategy, which is going to take a long time, but which is essential, you basically want to start trading on demo or a small live account. And when you're trading, you want to keep track of every single trade you take. And then after some time, you want to compare it to your system performance, so to see if you've made any mistakes during that period. But you also want to look at your backtest results, and do the results you get from live trading, do they look like the ones your system should get or the backtest performance has gotten? And see if there are major differences. If that's the case, you want to really investigate what's going on. If that's not the case, and you notice that you've made some mistakes with executing, then you can come up with a plan to fix that. But you need to compare your normal, quote unquote, normal performance to the performance you're getting, and to see if there are things that are going wrong, and to see if there are things to improve. So that's something you want to track. Next thing is your emotional states. Now, this is something that's important for discretionary traders. Now, I'm a mostly mechanical trader, so my emotional states are a bit less important, because to me, my trading is just black and white. If something happens, I do this, and that's it. There is no thinking involved. But a very small part of my trading is discretionary. And so I keep track of my emotional states. If I feel confident when I'm entering, if I feel hesitant when I'm entering, if I feel focused. And sometimes there are patterns. Sometimes you can see that from the 10 losing trades you made, 7 of them were in a hesitant state, while the 10 winning trades you had, 8 of them were in a confident state. Now, that's something you can work with. But again, if you're not tracking it and you're not taking the time to review those things, you're not aware of them, and you can't improve, and you stay stuck. You keep losing money, and you blame your broker. No, that's just usually the path people take, but you get the idea. So the next thing is different ways of trade management. Again, I always speak about this when people ask me what to journal and what to review when journaling. And that's different ways to trade management. And I'm surprised not many people think of it. But let's say you move to break even because you don't want to lose money. Now, I'm very much against that, but maybe it's working for you. But how do you know if you're not keeping track of it and if you're not reviewing it? Because I found that if I manage my trade, I lose more money. So I don't manage my trades, but I'm still keeping track of different ways of trade management because I want to improve. Let's say I found that some way of management is giving me more money, then I'm going to implement that. But if you're not tracking it, you don't know it. And like the point I made about break evens, a lot of people do it because they, excuse me, because they don't want to lose money on a trade. And that's such a wrong way to think, because at that point, you're not trading the markets. You're not looking at the chart. You're not thinking about your edge. The only thing you're thinking about is not losing money. And that's really a recipe for disaster. So if you are one of the people that wants to move to break even, you better be damn sure that it's giving you a better performance over the long run. And if that's not the case, if it's only giving you a better feeling about yourself and you feel like a hero, don't do it. It doesn't make sense. You want to be doing the things that are increasing your performance. And if you're just moving to break even for the sake of not losing, don't do it. But keep track of different ways of management and find out what works best and implement that. And there are some more things you can track. You can take some notes. I always advise to take print screens when I'm tracking. So then when I'm reviewing at the end of the quarter, I can see the trades I took. I can see connections between winning trades, and it really, really helps to increase my performance. Now, the reviewing routine. So you can review daily, weekly, monthly, quarterly. It's kind of depends on how often you trade. I trade around, I'd say 8 to 10 times a month, which means to me reviewing my entire journal daily doesn't make any sense. Every week I fill in my journal with the trades. So first of all, I enter my trades immediately after I've executed the trades. Then I enter them in my journal. Then at the end of the week, I go in my journal. I see if I have to update things. I also write a bit of summary about the week, what I've learned, what I can improve, and some notes. And then at the end of the quarter, I clear a few days out of my schedule to really dive deep into the last quarter and to see what I did wrong or what I can improve. But it's up to you. If you're taking 5 trades a day, you definitely want to do this earlier, because after a month you've taken a lot of trades, and then you have a decent sample size to increase your performance. The next thing is you want to keep a routine. So you want to make it consistent, because otherwise you sometimes forget it to review, or you just think like, I'm not going to do it. You want to keep it simple, and you want to keep a basic routine. And the aim when reviewing should always be to improve performance, improve your risk management, and to learn from your mistakes, and then come up with a plan to fix those mistakes. So I hope you guys learned a lot. I hope you now are encouraged to get a journal and to review your trades. I also gave you some tips about what to review. Again, with my clients, I go way deeper in these topics. I also have live calls about these topics, and I help people to develop a journal and to dive into the journal to find ways to improve. If that's something you're interested in, go to my website, www.cdfxtraining.com. And if you have any questions about this, or if you like this, please leave a comment. That will massively help you. And if you have a question, I will always answer those. So I hope to see you guys in the next video.